Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and today is Wednesday, August 11th, and this is your end of day market recap. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Everything we are going over here is for education purposes only. If the video is a little bit blurry or fuzzy, it is because YouTube takes forever to render their high definition videos, so just give it a little bit more time. Interesting day on our hands. It seems like every day is kind of an interesting day. A lot of rotations going on. All kinds of things going on, and the S&P just continues to kind of not really move too much. A little bit to the upside, a whole 0.2% today. Not 2%, 0.2% in the S&P. So big move comparatively to what we've been seeing over the last few days. But listen, that's how it is. That's just how it's been going lately. Theme of the day, a couple things that I thought would be the driver, or a couple possible drivers for the day, was the CPI report. The second thing was the bond auction, which was the 10-year bond auction, which there was some strong demand for, and that got bonds to rally a little bit, and just kind of took a little bit of pressure off some of the some of the growth areas of the market. So I thought that went well. And then of course, if we switch this over to the CPI report, I think a lot of investors, traders, whatever you want to call them, on the institutional side, were a bit worried about how this inflation report was going to come in. It's still pretty high when you look at this number year over year, 5.4. But of course, what we really try to be aware of is what the expectations are, right? Just like an earnings report, it doesn't matter what the company reports. It matters what the company reports versus expectations, right? If everybody is expecting a good report, and it comes in line with those expectations, then the stock doesn't move that much, right? If they happen to crush earnings and the expectations were low, the stock is going to pop. Same thing with this. I think that people were fearful that we were going to get a much bigger inflation print for the month. It came in line, so there wasn't that much of a reaction. We actually saw a little bit of a relief bounce. And then that was kind of faded a little bit, until we got to the bond auction. Keep in mind for tomorrow, right? I mention these things because I think they are important and they can affect overall stocks. It's amazing that people, there are a lot of retail traders that I get it. You're just watching price action, but in my opinion, you want to be aware of some of these events as they're going to move things, right? Either you want to be in the know or you don't, right? And then, I always see that on Twitter, like, oh, what happened? Well, I don't know. You got to pay attention to the macro stuff. So tomorrow we get PPI, right? Producer Price Index, which is another gauge of inflation, and that estimate they're looking for 0.6. The other thing too to watch is we get another big government auction, but that's at 1 o'clock, so that's later in the day. Again, what does that mean, right? Well, it's going to move the long end of the curve around, right? So if you look at things like TLT or ZB, which is something that we go over in just about every video, what the long bond is doing, because it has a lot of implications, right? The higher yields go, there is this relationship right now that when yields go up, growth stocks get hit a little bit. All right, so we'll be paying attention to what the long bond does today. Again, if you want to look at the price action, first thing this morning, right, you had a little bit of a bond rally on the 8:30 CPI print, and then here's the 1 o'clock auction. Now, again, some of these things they revert back, but again, I think for the most part, we just don't want to see yields spike higher. So keep in mind, this is in the perspective. Bond futures, or TLT, is in the perspective of bond prices. So you have to realize that it's an inverse relationship. When bond prices go up, yields go down. Right? That's how the relationship works with bond prices and yields. So just be aware of that whenever you're looking at the bond price. This goes up. This moving down this last week has meant that yields have been going higher. Notice we did find support. The 80% rule is just about complete, right? On our MarketWebs indicator, a move through a value area, from when you start the period above value and you get inside value, there's an 80% chance that you go all the way through. So we're just about at that. You can see in the top left of your screen, that's what the indicator is telling us. So we basically have made that move. All right, let's get, we'll talk about some stocks and we'll talk about, the indices. As I mentioned with the S&P, that's actually a bigger green candle than normal. It has really been a grind higher here. It's been pretty amazing that some days that the S&P really hasn't done much, but there's all these rotations that we're seeing that are in play. Specifically, a little bit of selling pressure in Nasdaq again. That's kind of started yesterday and had some continuation today, but they were buoyant, around that bond auction today, and really didn't do much this afternoon other than the initial selling, which happened right on the open till about 11:30. So we are seeing that, interesting. Like I never really understand this fully, but who was bidding up Nasdaq futures like this, from 8 o'clock till after the CPI report. It's tough. It's tough when right now in this market when we open up in the green, right? It just begs to be sold for now, until things change. And then the small caps were really interesting today. They did this, right around 12 o'clock, right? They were going down again. I tweeted out, I was making a joke because I like to joke around a little bit, but I was saying that the small caps moving down, you're killing me, smalls. But they had a nice turnaround at 11:30, just up straight and to the right. So there was some buying or accumulation in the Russell futures. Again, this is like the just the oddest index right now, right? Every time it looks like it's going to break down, it bounces back. Every time it starts to move to the high end of the range, it gets sold. Just wants to do a whole lot of nothing except be range bound right now. Back and forth, back and forth, back and forth. The diamonds are breaking out, right? So this one moved for the last 2 days. This is actually, when we look at the indices, right? We'll get into the single stocks and sectors because there's a lot of big moves there. But in terms of the indices, you got the Dow breaking out right now, so not bad. Also, we like to look at this about once a week. This is RSP, so the equally weighted S&P. So the same names that are in SPY in the S&P 500, but just weighting them differently, right? So this is the equally weighted index versus the market cap weighted index, which is the S&P 500. Or SPX, SPOOs, whatever you want to call them, SPY. All right, so moving on. So here's where it gets interesting for the day, is these outperformers. Look at the charts in some of these, really constructive. I went long the home builders today. I couldn't figure out which one I wanted to pick. I often do that and do fairly well. I think sometimes retail traders get bogged down that they have to pick a single stock, right? If you can't decide, if one's not jumping off the page to you, I just buy the ETF, right? Because some of these sector ETFs, they move fast. They can move fast once there's some momentum behind them. And of course, what we're seeing play out is not just like a move into this home builder or that home builder. It's the whole sector, right? And that's what's been going on with the industrials, right? So XLI, which we've been talking about, I've been kind of, pounding on the table about how coiled this XLI is. This is now breaking higher. We've been doing very well. We put this trade on Friday. You could see it break out. It had a little bit of hesitation on Friday. I was a little bit disappointed I didn't get the breakout then, but look at it carry through. And then the other one was XLB Materials, right? So again, you could pick the single stocks. That's fine because some of them are going up. This was up 1.4, but you could find a couple of them, right, that are going up 3-4%. To be a stock picker, and I do that sometimes too, where I pick a couple single stocks and I own the sector ETF. But Nucor was up another 3.9%. A lot of the building material type companies, VMC, LMM, LYB, which is a name that we discussed yesterday, that was up 2% for the day. Newmont also in there. SHW, I love that name, was up 2.1% for the day. EMN, which was on Kramer last night, up 2%. But again, it's the whole group, right? There's one name, which was ALB, which has been on fire. But it's it's the whole group, and same thing with the industrials. If you want to look at the industrials movers for the day, URI. This is a chart that I put out on Bloomberg, not on Bloomberg, on Twitter last night. Right, so up 5% for the session. Right, I put this in the room last night in our chart section. This was what I put last night. And bam, out to new highs today. Very impressive move, up 5%. Unfortunately, I did not put the trade on. I'm in some other things. Caterpillar up another 3.6%. Wow, what a move. Again, we talked about this one on Friday. Nobody was talking about it on Friday. Sorry, giving myself a pat on the back. But hey, I love being first. I love being first on mentioning these things. No one was mentioning the industrials and the materials on Friday. That was me. That you go back. Everybody was talking a little bit about it yesterday, right? And talking about the steel names and Caterpillar, right? Some options happened in Caterpillar a little bit today, a little bit yesterday. Nobody was talking about it on Friday. That's why I'm very much I talk about this a lot. If you do the homework, if you go through your charts, which is what we do at Tribeca Trade Group for our members, right, you will find the setups before you see the option activity. I know a lot of people have trouble with this, but I'm telling you, if you do your homework, you will find the setups before. Just like this weekend, I was tweeting about steel names. Nobody was tweeting about steel names. I said, hey, take a look at STLD. Take a look at Cliffs Resources. What did we see first thing in the morning yesterday? Whole bunch of buying in Nucor, right? But you will find these things if you go through and do your homework night by night, right? And it's one of the things that I really enjoy doing is when the market is closed, just kind of going through, spending about a half hour to an hour every night, going through some, my watch list as well as the recent high list and just scanning through names, right? And I know there's so much of a tendency to rely on option activity, but the beauty of when you do this exercise is you get in before the names are up 2 or 3%, because that's what happens 90% of the time, right? Is that people are buying this stuff because it's moving and it's momentum, but you have to jump in after a name is already up sometimes 4%, right? And you got to decide if you want to make that move. Now, if you did that yesterday with Nucor, you won, but a lot of times you don't. Right? A lot of times they're buying calls up here. I'll give you an example, right? KKR, right? Everybody talking about a big call buyer that happened the other day. Where'd they buy the calls? All the way up here, right? So they're late. They didn't buy the calls in here, right? Or here or here. They bought them all the way up here, right? So, some of this stuff, it's really not useful, right? But like I said, if you do your homework, you will find some of these plays, right? So what I'm looking at right now is Blackstone too. That's kind of building a little bit. I would like to see this thing come back into like 110, 109. That would be lovely. But for now, I'm just watching it. I don't know if it's in enough. But at least now, seeing a call buyer versus on the absolute highs would be a little bit more useful. All right, so I went over a couple trades. I was in both XLI and XLB. Right, and you can see, I actually rolled the XLB yesterday. Right, so I was in the 85 calls, took these off for 222, paid 155, rolled them to the next higher strike and next month out to 87, and I actually got out of this today, 230 versus 177, and that's the second trade in this one because XLB, I think there is a VPOC that is very close to being taken out here. For now, that's good enough for me. And, that's how this market has been, just a lot of rotations. I didn't get to really talk about that too much. We talked about the home builders, the industrials, the materials. The transports were another big area, right? Everybody talking about, hey, what's wrong with these transports over the last couple months? Well, they're moving up quite nicely now. They're going to have to get through some resistance there at top of value. But for now, you got a nice bounce going on in the transports. Next area to kind of talk about was the banks. They had a follow-through move today, up 1.6%. I chickened out and got out of a JP Morgan trade right at the end of the day. Looks like that would have worked. It was up about 1% for the day. All right, and then when we get to names that underperformed for the day, Biotech. So why was biotech down 3%? Well, it's what we've been talking about this week. The main driver of this biotech ETF is when you look at the top weight. What's the top weight in IBB? It's Moderna. So Moderna obviously went up huge, fast, and has been coming down, very fast as well. Now into some support here, maybe could go down a little bit further, but it's going to be the driver of these ETFs, right? So you have to be aware of that, right? That when these names have when the top components have big moves, it's going to drive the performance. All right, so that's a story there, and then further rotation out of growth. Right, I mean it's very tricky right now in this market. I was in a trade yesterday moaning and groaning about Shopify because I was looking for this to break higher, and thank goodness I got out of this today, down another 2.7%. Right, so sometimes I hate taking off, losing positions. It stinks, especially like if it's around the lows of the day. But, I trade very disciplined. I'm going to have losers, and I try to keep the losers small. Every once in a while, they end up being a little bit bigger. Like I got hit a little bit in that Shopify trade yesterday, but hey, I feel so much better about it today because I didn't get caught in it. Same thing with CrowdStrike, right? I was in CrowdStrike for a while, back and forth, and I added to it on this day looking for a breakout, right? A break over 267. And unfortunately, I had to abandon the trade, which is not easy to do. It's one of the hardest things to do, I think, in trading, is to take a loss on a trade and to have to do it on the low of the day, which is what I did yesterday because I'm like, hey, I looked at this around like 2 o'clock yesterday, and I said, if this thing doesn't come back, this is a nasty looking candle, big bearish engulfing. So again, I felt horrible about it yesterday, getting out of this on the lows of the day yesterday. But look at what the thing did today. It was down at one point, I think 6 or 7%, right? So you got a breakdown in some of these things that just did not break higher, right? And this isn't the story with all growth stocks, but there's a number of them that just, when a lot of other names were breaking out, they just could not get there, right? So that's a sign that there's something wrong. Right? When every growth name is breaking out to new highs, and there's a handful that are close but don't do it, there's usually something wrong, right? And you can kind of see what's going on there, right? So now you got a breakdown. So we'll have to see. I actually bought a couple lotto calls at the end of the day because I think this is one of those names that buyers come back into. But hey, I'm just in it for a lotto. I'm not in a swing trade at this point. But again, this makes me feel so much better today knowing that I followed my trading system, even though it's not easy to do. But in this market, you got to avoid big losses. I find it right now so much harder to come back from a loss because we're just not getting, this blast off market, right? It's a lot harder to recoup, a bad loss right now, right? It could take you days. Could be longer if you have a day where you're not respecting your stop prices. The other thing that we talked about in the TTG Q&A session today is, some of these names, they're moving so fast, right? By the time sometimes you see what's going on, it's too late. So, the best thing that I could say, and again, I'm not giving any advice or recommendations, but this is right here what I've got highlighted. Having less positions on, smaller position sizes, and avoiding a lot of short-term option risk as we grind right now in this market, right? And that's the other thing. I've been saying this a lot to people too. You have to have alerts on your positions, right? As soon as I get into a position, right? I do two things, right? I look to see where I want to take my first target, and number two, I place an order out there for my first target, and then I also place a downside alert for when the trade doesn't go right. Right? There was a great article out on or thread that was on this weekend about Jim Simmons, right, and Renaissance, right, the big fund Renaissance that has made probably one of the best hedge funds over the last 20 years, and on average, right, they've crushed it. But on average, their wins versus losses, right? If you look at trade by trade, it's like 50-50, or maybe 51% to 49%, right? And they're one of the best. Now, what they do is they let their winners run and they cut their losers, right? So you have to think like that. It's one of the biggest things that I find retail traders struggling with the most is being able to cut a loser, right? One of the mentalities that I see, because I do a lot of coaching at the Tribeca Trade Group, and one of the biggest mistakes I see is that young traders, retail traders think that the market's always going to come back, so they don't sell, right? They just warehouse their trades and they only sell them once they get back to their cost basis. It is one of the worst things that you could probably do if you're a trader, right? If you've got a long-term horizon and you're not trading, okay, maybe you can kind of do that in your investing account. But if you're trading, and you're committing a decent size per trade, it's one of the worst things that you could do is not getting out of your losers, not cutting your losers fast. And one of the best things that you could learn is to kind of roll with the punches and get over your ego. All right, and that's one of the biggest things that I would say for retail traders to learn is that to be able to take a loss, right? You got to put your big boy pants or big girl pants on and get used to taking a loser. It will keep you out of trouble, right? And again, it will really help you in terms of accumulating and compounding, right? The more that you hang on to losers, just the harder it is to continue to kind of grow your account. All right, so that's a little bit of preaching for you, but this is important. This is really what it comes down to, right? We could talk about winners all day long, right? But it's really how you manage the losers that is going to make or break, what you how you get out of this, how you fare in this market, right? Especially with what's going on in the tape today, with rotations back and forth into value and in and out of value and in and out of growth. All right. A couple other names just to quickly talk about. Even though I didn't have this name, but another strong name, Mohawk Industries, up 3.7%, very, very strong. This is a name that I've been talking about for a couple weeks because I've been in this trade for a while. Finally got this one to work. Fortune Brands, again, just had to be patient with this one. That's another thing that's a whole other topic that's very difficult, but I had to be patient all through this back and forth. 1, 2, 3, 4, 5 days before, so I had to wait a whole week from where I put this trade on, and now it's moving towards this. Now it's getting going, and at that VPOC, but it's not easy to do that. Again, position size helps. The lower that your position size is, the more that you can kind of withstand the bumps and not get shaken out when something like this happens, because there was no real sell signal, right? There was just a lot of chop in this name. Another name that we talked about too was, I think we talked about this one at the end of the day. One of my colleagues brought this one to my attention. Tractor Supply pushing out here, just like we talked about in URI. Another one too that was brought to my attention too was Illinois Toolworks. Strong with this one too. We'll see if there's some continuation in this. I've gone here 20 minutes and I haven't talked about some of the biggest movers of the day, but look at this upstart. Phenomenal. Closed on the highs of the day. Look at the volume. I think this thing can go higher. I like how it managed to get over some of the virgin point of controls that I talk about all the time. Right, there was one right in the beginning of the day. We'll just wait for Thinkorswim to adjust here. It takes about 10 or 15 seconds to get all the history to crunch all the data. But what you will see in just a second. Right, I got 100. Yeah, it's 180 days of data. But what you will, there it is. So see that VPOC that was taken out right in the beginning of the day, right? A little bit of a fade from there, but I love how the stock, came back at the end of the day to kind of overcome that, right? These virgin point of controls that there's fades, but names can power through them, right? And there's right here, here, and here. Also on the 1 hour bar, this one was taken out yesterday. So I specifically talked about that in yesterday's video, that I thought that this name could get through and go higher past that VPOC. And I talked about maybe setting a stop at 155. If you did that, you did well, because it never breached that level. A surprise for me, right? How much did I badmouth this name yesterday? Unity Software. This did close right out of VPOC. I mentioned that there's going to be some overhead supply today in the trading room, but it did make it to this 120 level. So we'll see what this thing does. It does look like a big inverted head and shoulders to me, right? Left shoulder, head, maybe right shoulder, maybe a little bit abstract here with that pattern. But that this would be wonderful if this name could get going, right? I have nothing against, right? I was bad mouthing this thing so bad because I saw it down in the after hours, but maybe this thing could get going, and I might add these to the TTG Trend Portfolio. I was going to do it at the 3 o'clock trading window. That's in M1 Finance. I just didn't get the order in. I also wanted to see how they're going to close. So hey, looks pretty good, right? So again, I don't stay permit anything, right? I adjust to what the price is telling me. So you've got something that looks, a bit better. All right. So what else? The other thing that I'll leave with here, because I think we talked a lot in this video, but I always see on Twitter too, there's a lot of people who just tweet out growth charts, right? They're growth investors. I look at growth stocks. I'm telling you, right? The more that you can get over this and look at some other areas of the market that are participating, some of these areas that I've mentioned, the home builders, the industrials, the materials, right? And at least, you don't have to go through all of them like I do. But if you have one or two names within each group that you can go to, you're going to make yourself, you're going to make your life so much better, so much easier, in my opinion, right? Why would you have to sit and sit out this market if value and cyclicals outperform, for a couple weeks, for a couple months? What are you going to do with the growth names? You're just going to sit and be upset about it, or are you going to participate in the other part of the market that's going up? All right, just something to think about at the end of the day. We're not permit anything at Tribeca Trade Group. We trade whatever's moving, and we look to capitalize on that. Guys, have a great night. See you tomorrow.